Hello and welcome to another episode of the Money Matters podcast. My name is PJ Patterson, and today's topic is about managing your emotions in markets. And this is a really important topic because a lot of investors will find themselves at any moment in time either very fearful of something going on in markets or potentially feeling elated, or I call it greedy, but elated because they've made a lot of money in the markets. And one of the things I try to do in my business when I educate my clients about investing is to say that you shouldn't feel anything about markets. You should be, and I know it's hard, but you should sort of be completely agnostic about markets and the direction of markets. The most important thing to do is to have some guideposts to help guide your emotions because let's face it, and I agree that it's very difficult to completely suppress emotion when you're trading because let's face it, when your account's ripping and you're making all this money in markets, you feel great. You feel like you can never do anything wrong, that you've made all the right decisions or whatever. And maybe before you've crystallized any of your profits, you might have even spent that money. So that's a particular emotion that needs to be managed carefully. But on the flip side, if something is going against you, if a trade or a position that you have on that you feel should be, or the data, the probability of the trade tells you that it should be successful, but it hasn't been successful, it's very difficult not to get down about that. And so there are some things that I will discuss in this brief episode about managing your emotions that should help you to actually do that. So first of all, you should one of the first guideposts that you need to have in managing emotions is asking yourself what is the current economic environment. So I've had in this past week, I'm recording this early 2021. It's late Feb, early March. We've had a great run in markets thus far. Pardon me. And we've also had some down periods. We've had a couple of days, or even a span of maybe 4 or 5 trading days, where the market's gone down. It's typically then recovered, but it's bouncing around a lot. And one of those things driving that is volatility, and I'll come to that in a moment. But the first thing that's important to note is, and ask yourself when you feel emotional about markets, is what is the economic setup? What quad are we in? So for those of you that are listening to a lot of my podcasts, you know that I work on a 4-quadrant model. This is a model that's been put out by Hedgeye, and it is a very, very powerful model to understanding what is going on in the economic environment at that moment of time. And so right now, as I record this, we are fully in quad 2. It's a reflation quad. It means that we're going to see asset prices inflating. But it doesn't mean that everything is going to go straight up or straight down. So the things you don't want to own aren't going to go straight down, and the things you do want to own aren't going to go straight up. There's going to be some volatility bouncing around in the quad. But the point I'm trying to make here is first and foremost, when you are beginning to feel emotional about markets or whatever's going on out there, pull right back to the highest level macro analysis that you've got and ask yourself, what's the quad that we're in? And if there's no one that's giving you that sort of macro analysis, you should find someone that will do that for you. Obviously, at Keystone Financial, we have that model that we operate in. But the point I'm trying to make here again is that you have to first and foremost reassert or reaffirm what is the quad. Because just because your trades aren't working today for some reason, because of something going on in the market, it could be a central bank doing something, it could be some other event that's thrown it through a loop or whatever, for a day or two, it doesn't mean that you're wrong about the market, or the market isn't going to eventually respond in the way that you've set your portfolio up. So again, pulling right back to the very highest level is probably the first and most important thing to do. Ask yourself, what quad are we in? So again, right now, we're in quad 2. In another 6 months, we may be in quad 4, and I would have a completely different portfolio setup to manage those risks. The second thing to do is to look at the volatility of the market. So there's a number of volatility measures. One of the key measures, and I'm based in Australia, so one of the key measures I look at for Australian volatility is the XVI, which is the Australian ASX market volatility index, and it will fluctuate depending upon what is going on in the market. Another key metric is the S&P 500 volatility index, which is the VIX, VIX, and then there's another volatility measure for the VIXN, which is for the Nasdaq, which is the VIXN, VXN. And anyway, I have had other podcast discussions about volatility, and there are 3 regimes of volatility. I'm not going to go through those today because you can go and have a listen to that podcast. But right now, we're in the volatility regime, which is the chop bucket. And so it's going to fluctuate quite a bit. It's going to go up to the high end of its range, and it's going to then come back down to the low end of its range. And of course, what we're looking for when we observe volatility is it episodic and non-trending, or is it signaling that there's a trend change? So again, managing emotion, and motion can be tied very clearly to volatility. As volatility rises, the markets are going to be doing could potentially be doing some very weird and nasty things, and moves will be exaggerated. So again, you have to check that emotion and say, okay, well, hang on a minute. Again, number 1, what quad are we in? Number 2, what's volatility doing? And I think if you did those 2 things, just in isolation, and well, not in isolation, but in tandem, but isolate those 2 things, that will help you get a grip on your emotional state and say, okay, I know where we are now. I'm oriented. I've reoriented the map to where we are right now and today. So I don't have to panic. And then, of course, you can just go through your positions and ask yourself, again, are these the things that I need to be owning for this quad and for this volatility regime? And if you get nervous about it, guess what? You always have the option to pare back your positions. You can sell some or all of them if you are nervous about it. You always have that option. So again, managing emotions in markets is a very, very difficult thing to do. I constantly find myself having to ask myself those 2 questions and there's a number of other questions I ask about markets too, which I won't go into today. But there's a checklist of things that I do and I go through whenever I'm feeling both elated and panicked about markets. I hope that's been useful, and as always, emotions are something that we all have to keep control over and manage. But if we have a good process, which I think I've gone through 2 good steps to a process today, if you have a process and you don't panic and you rely on the data and the probability of things occurring, then you will definitely be a more successful trader. As always, thank you very much for your attention, and I wish you all the success with your investing.